Welcome to the daily update for Thursday, January 27th, where we'll talk about the action in the market today and then see how things look for Friday, January 28th. We're seeing a continuation of the same scenario, selling into strength. We had a pretty nice gap to the upside. Things looked like they were going pretty well. We saw a little bit of renewed buying earlier in the session, but then as we've been seeing, once that strength kind of went sideways a little bit, we saw people starting to sell. Had been up pretty strong on Thursday. Well, when the selling kicked in, that took a step back down to the unchanged level. That acted as a little bit of support, but then we fell through that and declined and then kind of chopped sideways into the close. So the same thing that we've been saying all week played itself out again on Thursday, selling into strength. One thing I want to talk about is on February 1st, starting next week, I do want to have a private Facebook group. It'll start off really small, but that's okay. If you want to join, it's free, but it will be moderated. We don't allow for self-promotion. If you're a teacher or if you share information either in written form through a blog or if you post videos on YouTube, I would love to have you and I would love for you to share your insight. And if you're really good, I have no problem sharing you as some kind of a resource that people can use. I don't have all the answers. I look to other people to provide some insight. I look for information from multiple sources. I don't have a problem with that. But if somebody's going to come in with one of these spam comments that is just based on garbage, that's going to get eliminated really quick. So if you do have a pretty solid background and you want to participate and you want to be respected, and if you want to share some of your insights, you are very encouraged to join the group. We want to try to keep focused on the S&P 500. We will talk about other markets since the stock market does not act in a vacuum. But when everything is said and done, whether you invest in individual stocks or in different markets, having good insight about the S&P 500 is very beneficial to you. So you can take that and then use that in your own area. I want to really support spirited and lively discussions. Doesn't mean we're trashing each other back and forth, but ask good, hard, solid questions. And some people may have a difference in their views on things. And so there may be some back and forth. That's totally cool. I have no problem with that. That's what America was built on. We will also have a chance for Q&A, and I can easily set up a time for live broadcasts if that's something that is interesting to the group. So the best way to get involved in this is to email me at john@spxinvesting.com. I'll add you, and then once the group actually gets going, I'll invite you into the group. We do need to become friends on Facebook first. So if you're a Facebook user, feel free to send me a friend request or an email, and then we'll take it from there as far as getting you into the group. Okay, so let's look at what happened on Thursday. We did have a gap higher open. The futures were strong during the night. Europe had a pretty good day on Thursday, and we opened to the upside. This came off the heels of some earnings reports that provided a bit of a positive backdrop. And when you combine that with the oversold condition that we're dealing with, we saw a gap higher. But we hit resistance at R1, which is right at about the 44.30 level. And that also is right around the 200 simple moving average level. Once we hit that level, everything pretty much stopped, dropped back, and then we saw over a period of time this switch over into more of a negative environment as the day went on. The markets are using Fed Chairman Powell's statements that he made on Wednesday to justify the selling. That's kind of provided the overall mood of the market right now. So we are seeing a continued selling into strength. The gains that we had during the session were lost, and the S&P actually went negative. Into the close, we closed down 0.54%. Volume continues to be above average. And the fixations of the market right now include the post-Fed meeting reaction. That probably has at least another day to go, which would be during Friday's session. Then the weekend comes. Something can happen either economically or geopolitically, and the Fed statements will still be there, but they might be replaced by something else. There are weak technicals that we're seeing across the board, pretty much on all the charts. We're still in earnings season, and I think Apple is getting ready to report, or has reported after the close on Thursday. There's still a lot of talk of inflation, and in conjunction with that are interest rates, and then the geopolitical concerns, specifically between Russia and Ukraine. So some comments that we can make: we are seeing selling into strength with no real definite catalyst. And some of the things that we've been seeing for a long time in the market, it's overvalued, our PE ratios are way out of line. We are way ahead of where prices are based on what their average price should be. This overvaluation in the market, well, those have been in the background for a long time, but now maybe they're starting to work their way into decision-making processes that investors are making. I read through an article that said some are even thinking now that there might be 5 interest rate hikes throughout 2022. But then if everything starts to slow down, what's that going to do? That could really throw everything into a real, even bigger mess than what we're dealing with now. Tesla and Intel on Thursday did have very heavy losses. They were down multiple percent in each stocks. GDP that came out was strong, and it shows decent growth, but looking ahead, it's like, are we going to be able to continue this growth? That's something that we need to really pay attention to, because there might be a slowing down in the economy. And this corner that I've been talking about with the Fed possibly backing themselves into, where if everything slows down economically and they're pretty much at low interest rates already, what are they going to do if they need to step in and try to do something about this? One thing that's been kind of encouraging this week is the US dollar index has been really strong. A lot of that has to do with this rising interest rate environment. Well, over on Thursday, the dollar index actually went above 97, and it hasn't been at that level for a long time now. The dollar may end up falling apart at some point in the future, but right now it's holding up pretty well. It's a fiat currency, which means it's not backed by anything. But none of the other currencies in the world that really are main currencies, they're not backed by anything either. So you have the euro and the dollar, which are both not necessarily good currencies, but the US and the euro are considered the least crappy of a whole basket of crappy currencies. Then we are overvalued, and we will continue to be that way. We need to see massive declines from here for the market to get back into just to the expensive level, let alone get back into neutral or cheap. The trend condition is negative with a negative bias. And that's pretty much been the same scenario that we've been going through every day this week. So let's look at the day's session. As far as sentiment, we're seeing a little bit of increase in fear in the markets, but we're still midpoint. There's not any real freaking out. We're not seeing any kind of what do they call that? Critical mass at any point, where either to the upside or to the downside. As far as the VIX, it came down a little bit on Thursday. And within the session, it started to drop when prices were up. But as we saw the decline, the VIX really started to climb as well. And even though it wasn't a big movement day for the VIX, it still closed near the highs for the session. Then looking at another chart, this is called the VIX of the VIX, and this is a new chart. So we have the VIX, which measures fear. Well, then they've calculated another VIX to see what's the fear inside the fear gauge. And this is spiking up pretty heavily, but it's also coming down a little bit. So we want to keep an eye on this, especially when it gets up to the extreme readings. As far as the sectors, we were kind of half and half. A few of the sectors were negative: discretionary, real estate, financials, industrials, tech was down. But then we had a number of sectors that, even though they were much higher earlier in the session, they still were able to have gains throughout the day, with energy leading. And that seems to be the kind of area. Oil had a pretty good day today. We're seeing a real rise in prices as far as energy is concerned, as well as utilities. So we're seeing some growth in those areas. And then our chart, since the recent high, energy is in the lead. Discretionaries, which took a bit of a hit on Thursday, they still are the weakest. As far as inflation, our BDI was up just slightly on Thursday, but we're still trying to figure out, is this chart really telling us anything? As far as the technical alerts, oil hit a new 4-year high, which you love if you have to fuel your vehicle. The dollar set a new 52-week high, and I kind of talked about that. The S&P 500 did cross back above 4,400, and that was seen as positive. The euro set a 52-week low against the dollar. And when you look at the dollar index, it's really the euro and the dollar. There are other currencies in that index, but those are the two main players. The NASDAQ crossed 13.6 and also then crossed 13.7 early in the session, but later on, it went below 13.5 and then eventually below 13.4. So the first alerts are at the bottom. That's the way I read this. And then as the day goes on, more and more alerts are triggered. One thing at the very top, gold crossed below 1,800, and I'll show you the chart of that. I don't follow, I follow the futures contract, the continuous gold contract. But when I show you a chart, it's the GLD ETF that I talk about, because there's volume attached to that. So we gapped up at the open, looked like we're going up pretty well. We got almost up to R1 with the price advance. Then we saw some selling come in. We treaded sideways. And then when it looked like nobody was really going to take things higher again, this is when we started to see the selling. We dropped below the pivot. We danced around the unchanged line for a little bit, but then dropped below that. Now, once we dropped below 0 for the day, what had been support now becomes resistance. We went back up to the unchanged level. That didn't really decide anything, but there wasn't a lot of strong selling going into the close. We kind of chopped sideways for the rest of the session. Then we're still maintaining things above the October lows, and that's kind of a positive thing right now. Even though we dropped through short-term support, we're not seeing a series of higher highs and higher lows. That's pretty much off the table, at least right now. But we are staying above those lows that we set back in October. We're down 9.8% right now. This is based on closing values. So it's the close at the high that we set back in early January, and then the close on Thursday's session. So if you talk to different people, or if you use intraday, the high that was set on January 4th and then the low that was set on Thursday, you'll be up in the around 11% range. I just do this based on closing prices. We saw a continued down blip a little bit when you're looking at growth versus value and a little bit of an advance value versus growth. Then what I have here is just, this is also a new chart that I look at every day, but I'm showing for the first time. The NASDAQ 100, which are the 100 biggest stocks in the NASDAQ, and a lot of those are tech stocks. We compare that with the S&P 500, and we can see going into late 2021, we were seeing this weakness. Well, when we got into 2022, that's when we really started to see a decline. So this is just taking one index and comparing it with another index where everything's going down, but this just shows you relative, the NASDAQ 100 is showing more weakness right now than the S&P 500. As far as our trend, we continue to be negative. We're seeing the red line of the ADX come down ever so slightly off of that extreme high reading. And the green line, it went down a little bit on Thursday, but is still pretty extreme. We might spend some time treading sideways, possibly into Friday's session. As I started recording this, the futures were up about 0.56%, but that can change massive times between the time I saw it and when we open Friday morning. But we are in a negative trend right now. As far as breadth, we saw continuation of a decline based on price and volume, with our moving averages showing continued weakness. Our ratio, we're getting down into the more extreme negative territory. But as we saw during the COVID plunge, it can look like an EKG when it's showing an extreme reading. Doesn't mean we're going to necessarily bounce right up out of this. It doesn't mean we won't do that either. We could have a really strong day and everything just shifts back to the positive side on this chart. New highs and new lows continue to trail off, even though on Thursday we saw slightly more new highs than new lows that were generated, but overall the trend remains down. Then this is another new chart. This is the accumulation distribution. And for a long time, I didn't show this chart just because we had been in a solid uptrend for a long time. Well, we started to level out in late 2021, and then into 2022, we've now dropped below that. So this is just an accumulation of the advancing volume, subtracting the declining volume. As far as our short-term indicators, we're looking negative overall. The 20-period moving average is in extreme negative territory, turned up ever so slightly after Thursday. The 50-period moving average continues to fall. The 200, and this is longer term. This is why I'm saying longer term, we're starting to see some weakness developing. The main tool that I use to determine the long-term trend is the 50-period moving average, if it's above or below the 200-period moving average. Well, that's a long ways from happening right now, but we're seeing some other measurements show weakness as we look further off into the future. Then the moving averages were kind of treading sideways, and we went right up to about the simple moving average, the 200-period moving average. And then that's when things started to turn and go the other way. Then the stocks within the S&P 500 that are above their 50-period moving average, that continues to decline and is negative. Their 150-period moving average, that's a little longer term, that's negative, and above the 200-period moving average. So yeah, you see where longer term, we're seeing more weakness develop. The MACD continues to, I've said the same thing every day this week. It continues to be negative and is an extreme negative reading right now. The short-term Swinland trading oscillator, it turned up ever so slightly based on price and volume on Thursday. McClellan oscillator also saw a little bit of a blip up, but pretty much a sideways move from Wednesday to Thursday. Stoke RSI continues to be pegged negative. The rate of change 5, yeah, it's starting to come back ever so slightly. This goes back 5 periods. So as we're coming down, we're only going back 5 periods. So we're not calculating from the top anymore. We're calculating more down in this range. And so that helps this indicator to turn up ever so slightly. Same thing with the 10 period. It's showing extreme negative and has not turned yet. It goes back further in its calculations. With the 20, same thing is true, extreme negative. And the 150 also continues to go lower. And the 200 continues to go lower as well. So shorter term, as the calculations are a little bit different, we're seeing a little bit of an improvement. Doesn't mean we're going to change. It just is calculating things different. And some people may use that as a sign of hope. Standard deviation, we rolled over just a little bit, but we're pretty extreme right now. Again, as things chop sideways a little bit, it's giving this indicator a chance to recalculate, and it's slowing down a little bit. When this slows down, it starts to decline. The percent B is coming up off of an extreme negative reading. Again, as the Bollinger Bands recalculate, we're getting closer and closer to the lower band. Williams percent R, after blipping up on Wednesday, well, with the decline on Thursday, we're now in danger of dropping down into extreme negative territory. Intermediate term, our 50-period moving averages continue to roll over, and they will until we see a pretty big change. The PMO, negative across the board. Also, other PMO signals were still negative, with the PMOs that are rising. Then those that are generating buy signals continues to decline, and those that are above 0 also continues to decline. BPI, because we dropped a little bit, we saw not very much because we're consolidating a little bit right now. So we saw a few new point and figure sell signals, but not a lot. We're going to have to break above or break below for this to really generate any severe directional movement. The rainbow, yeah, we're slicing through. The longer it takes for us to get back up, if we even do that, the more these moving averages are going to roll over. And you can see we're starting to see them roll over now. Stoke RSI, short term, it came off of an oversold reading, but declined on Thursday. Intermediate term, same thing. It bounced up, but fell slightly. And then we're seeing a little bit more hope with the longer term stochastic, where it just might be starting to turn up. Vortex, because we're chopping sideways, we're seeing a decrease in the selling pressure and a little bit of an increase in the buying pressure. And it's coming up off of an extreme negative reading. Shouldn't say buying pressure, buying power. But the summation index, it's dropped below 0 and is down based on price, and it dropped below 0 already based on volume. Our momentum oscillators, I don't have any real individual charts to look at because all of these are pretty much saying the same thing right now. Chaikin money flow, it declined a little bit with Thursday's decline. CCI is also, it's trying to come back up and generate an official oversold reading. That's what happens when it comes back across this extreme negative line, but it hasn't quite done that yet. The Ulcer Index continues to advance. Pretty much anytime we have a down day now, this is going to increase. Longer term, we're starting to get back up to more of an extreme level. The Copic continues to decline. And on a longer term basis, we haven't been this low in the Copic indicator since the COVID plunge. The boom indicator, yeah, we're still very extreme. Short term, a little more intermediate term, longer term, this is still declining and could still go further than what it's doing right now. The Sean trend meter, it continues to be in extreme negative territory. It tried to turn up a little bit, but with the decline yesterday has fallen back down. RSI is pegged negative. As far as our trading systems, we're still seeing a blue line in the elder system, which is more neutral, but the MACD continues to decline. The SAR continues to be negative. As far as our different charts here, we're showing more sideways movement with the Heiken Ashi chart. The Kegi is showing, it's negative, but showing a little bit more sideways movement. The Renko did not add a new box. These boxes were already here, but it's also showing negative price movement. Our 3-line break continues to go lower and show continued weakness. Equi-volume, because we had a down day, this is a red candle, but we are bouncing up ever so slightly with the ease of movement indicator. Point and figure, this is actually kind of interesting. We had added some zeros, another 0 after Wednesday's session. Well, with the bounce up, that generated some new X's. And we are still in an overall uptrend because we have the blue line below this chart. Long term, the S&P and the equal weight S&P continue to move more hand in hand. And I'm switching this over to one of the longer term indicators, the special K, because it doesn't generate signals very often. But we are crossed over negative in the short term chart. Longer term, yeah, it's showing something that we have not seen since the COVID plunge. Broad markets, here's the S&P chopping sideways, same thing with the mid caps and the small caps. Looked like everything was starting to shift, and a lot of these other indexes were up strong on Thursday, only to give up those gains. The FANG stocks continued to get hammered and closed right at the low on Thursday. ARK had another bad day, down 3.91%. Kathy Wood, she's really struggling right now. And of course, everybody that thought she was the rock stars were going up. And then they got a little bit suspicious when the S&P was doing so well and she went sideways. Well, now that everything's rolling over, everybody's real critical. I think she's got some good insight. I watch videos that she talks on. I don't agree with everything. Some of the things are not necessarily relevant to the S&P 500, but she's a smart lady and she's developed her strategy. Well, right now her strategy is not working, where in the past her strategy worked really well. The Dow, yeah, we are seeing ever so slightly a series of higher lows, not necessarily higher highs, but we're seeing higher lows. That could potentially be positive. And we closed right above the pivot level. No, I'm sorry. We closed down near the low of the session. I read the wrong number here. Small caps, yeah, they saw some real weakness. They broke through support and closed near the lows of the session on Thursday. Same thing with the mid caps. So if you're bullish, if you want the market to go up, if your portfolio is geared towards the upside, you're getting kind of discouraged right now because you're seeing the potential for things to turn around and go up, but then it switches and changes and goes to the downside. So that can be very, very discouraging. NASDAQ, again, had been seeing a pretty good day, but then closed near the lows. NASDAQ 100, the same thing, chopping a little bit sideways. We are starting to consolidate a little bit, which will give some of these indicators a chance to recalculate. And then we'll have to see, is this going to be a base that the market moves up from? We established a base back in October before we ultimately shot higher. Or is this just a plateau that we're going to rest at for a while before we start to go lower? Then the Vixen, this is the VIX based on the NASDAQ 100. declined a little bit, closed in about the mid-session, but we're seeing overall some really intense fear in the NASDAQ 100, just like we're seeing in the S&P 500. New York Stock Exchange, we're bouncing a little bit sideways. We ran into some resistance, but then ended up closing near the lows. The Wilshire, same thing, closing near the lows and consolidating a little bit. All stocks continue to decline overall. What we're watching for now is to see if this blue moving average falls below the red moving average. This is one of the longer term trend calculations that I use on many, many charts. Overall, China, even though it's getting hammered on some days, overall, it's still in a slight uptrend. Emerging markets are starting to roll over. Europe, yeah, it's getting hit pretty hard, even though it had a decent day on Thursday. Japan is starting to go negative, and then the S&P 500 is now pointed down. Some of the broad market measures that we look at, it's like copper is just boom, 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 boom. It's like a billiard game here. It has a strong up day, then a strong down day, and then overall we end up just treading water most of the time. The dollar, this is what I was talking about earlier. We saw a really strong advance on Thursday. This is the daily chart, and then we're starting to complete the weekly chart, which is showing a good solid advance above an overall uptrend on the weekly basis. Oil, it declined a little bit on Thursday, but it's still at 86.61. Gold, yeah. Oh, we're breaking out. A couple of days ago. Nope, we fell back on Wednesday, only to fall back even more on Thursday. And we're starting to see the cross of death, or the death cross, where the 50 drops below the 200. But overall, does that really matter? Not really, because we haven't really been trending in the last year. Other people say this is consolidating, and the longer it consolidates, the more powerful the move will be in whatever direction that will be. We've got a lot of people thinking that when we do finally break out, it'll be to the upside, and you can make a real rational, justified conclusion based on that. But we need to see follow through with price. If you look at gold on a more trending basis, if you don't, if you just buy it because it's gold and it's always worth something, you like these lower prices because you don't care if it goes up or down. You just want to possess something that has value. If the dollar ends up going south, if we switch over to a crypto Fed-based currency, which there's a lot of talk about that now. So this is what people don't really mind, what the price of gold is. Yeah, it'd be nice if it went up, but this is what you're buying to hedge against inflation and hedge against the currencies really just falling apart. Then palladium, yeah, it's starting to move back up ever so slightly on Thursday after having a pretty big move earlier in the week. Silver, man, this is what's interesting. We came right up to the 200-day, bounced off of that, and then we're just going massively lower since then. CRB was up slightly on Thursday, but it continues to be in an uptrend overall. This can really feed into the inflation fears and then the inflation reality of what we're seeing. Then overall, and I'm going to change this chart up a little bit. I just go back to the beginning. I just go back 1 year on this chart. I want to go back to like the beginning of the year or a significant top or bottom or significant event to kind of recalculate this. But over the last year, oil has done the best. The S&P had been doing really good, but is trailing off. The dollar, it saw a bit of an upturn after Thursday's action. Gold has been declining and bonds were up slightly. Then Bitcoin, just to show you this is my end of day index chart. We came down to the 34 level, bounced up, and then had a bit of a decline on Thursday. again, as I've stated before, if we go below 30 and if we really get into the 29s, if not the 28s, that's when things could start to look really negative for Bitcoin. I said that before, and I made a number of videos right back in these areas in here. Well, that took us to new all-time highs. Is that what's going to happen here? We do see a potential head and shoulders top in this formation. It could break down below that. We might find some support. There might be something that justifies a lot of buyers coming in and then push prices back. And if that does happen, then we're looking at an even bigger potential head and shoulders top. As far as bonds, we saw a decrease in interest rates on Thursday, kind of across the board, except for the 2-year. It still continues to go up. And I'm just amazed at this. Just a few months ago, we were down at 0.2%. Well, now we're getting up to almost 1.2%. Nothing to brag about, but on a relative basis, that is a huge move. We've climbed a full percent. Then looking at things overall, where the US, we ticked up, I thought bonds were up, but at least on this chart, it ticked up ever so slightly. The UK, Japan is going sideways, and Germany remains negative. But our overall bond index, it was up slightly on Thursday, but overall we are in a downtrend as far as bonds based on price. So let's look at things for Friday. The downtrend continues. Short and intermediate term are oversold. And then the long-term trend is still positive, but showing signs of weakness. Those things that we've been warning about, or the flags that we've seen over the last year or two, possibly those are starting to come into play. Earnings season does continue, and then there's some economic reports that are coming out. I'm also going to rework the economic calendar. I've been playing around with that a little bit. We have personal income and spending. PCI will come out, or sorry, PCE will come out. And then we get the final University of Michigan Consumer Sentiment Index, which will come out, and the Employment Cost Index. So it's kind of a heavier day. Some of these can have an influence on the bond market and even carry over into the stock market. So what is our conclusion? The S&P is in a downtrend. This is the broken record part. Short term, we're negative, possibly coming off an oversold condition. Intermediate term, negative, possibly coming off an oversold condition. Long-term bias remains positive, but we are seeing signs of weakness. So thank you very much. Have a really good Friday and a great weekend. The next video that I record will be over the weekend, and I'll cover what looks to happen for Monday.